This year, Smarter Markets was back at the FT Global Commodity Summit in Lausanne, and I'm pleased to be joined by Leslie Hook, the Natural Resources Editor at the Financial Times. This is great because we're able to record this introduction after the conference when we both had a little bit of a chance to take a step back. And Leslie's kind enough to once again join us to give us a little bit of an introduction to the conversations that you're going to hear next. And Leslie, I think the Global Commodity Summit that the FT hosts every year is one of my favorite conferences of the year. You get all the right people in a beautiful location. And to me, it feels like more of a get together than a conference sometimes. Obviously, there are hard hitting panels, but it's also a chance to get the industry together to really talk about the issues that matter. And it's always an interesting agenda. It's always an interesting time in the markets when you host this conference. I don't know how you get the timing right every year. This year was right before the tariffs from President Trump went into effect. But I wanted to ask you, as you were putting the agenda together this year, were there certain topics you wanted to make sure got discussed at Lausanne?
Well, putting the agenda together is always a little bit of a looking into a crystal ball type exercise, but there were some clear themes that really came out of the conference this year. And one was just uncertainty. Nobody knows what Trump is going to do next. What is his next tweet going to be? What's the next executive order? And there was certainly a mood of uncertainty at the conference, which was held in late March. And even now, Dave, as you and I are sitting here today and having this conversation, we've had the Liberation Day tariffs, we've had the global stock meltdown. There is just huge policy uncertainty. And it feels like in a time of chaos, the commodity trading houses are there to deliver the right stuff at the right time to the right place. So that was a theme that came through a lot of conversations. This is an industry that's built to be resilient, even in times of chaos. And it was quite interesting to get a look under the hood, so to speak, at how different firms are doing that.
And it's been such a topic of conversation in recent years, the focus on supply chains that, I feel like pre-COVID, most people wouldn't give them a second thought. Obviously, these folks, supply chains are what they do every day. What was your takeaway from how people are thinking about managing the risk in those supply chains? And, I think as one of your panelists said, the trading house is acting as a shock absorber for the world economy.
Yes, I think that was Richard Holtum of Trafigura, actually, that used the shock absorber phase. I think managing risk is hard. But one change, I think a lot of the measures that were put in place around the time of the energy crisis and the Russian invasion of Ukraine, when we saw these huge, sudden changes in markets, I think a lot of those measures are still in place and are helping to meet margin calls and just provide the sort of cushioning. I mean, one thing that's really striking when you look at the large trading houses is that they have a lot of cash on hand, and they've also built up their own group equity. After these years of super profits, they're now in quite good financial shape. And one thing that came up a few times is how some of the trading houses themselves have kind of become lenders. They've become financiers of projects, whether that's through prepayments or another structure, but they're starting to take on a little bit of a different role in the supply chain and also move into different parts of the supply chain. We see quite a few trading houses getting more involved in upstream, whether that's buying more gas power plants, more refineries, but reinvesting some of their profits from those really good years into physical assets.
And, as you said earlier, of course, the conference took place before the US Liberation Day and the implementation of these widespread tariffs. But of course, we've been moving into what feels like a more fragmented trading world for the past few years. As you said, with the Russian invasion of Ukraine, there were sanctions. With a lot of the ESG movement in recent years, there was a focus on where commodities were coming from. And now with the tariffs, we've seen big dislocations, whether it's in the gold market, copper markets. Did you get a sense for how the trading houses and others in the commodity markets are thinking about moving forward in a more fragmented world?
Well, I think you're right, Dave. The world does feel more fragmented and even more so now after the US tariff moves than it did a couple weeks ago. And I think that, with these new tariffs and the trade war that the US and China seem to be getting into, it really does raise a lot of questions about the free flow of commodities. Now, the interesting thing about the US tariffs is, as you know, most commodities are exempt from the tariffs that Trump announced on April 2nd. But the response from other countries hasn't necessarily been to exempt commodities from their response measures. So we've seen China putting further restrictions on rare earth exports, for example. If you look at the shape of the market, the big independent trading houses are occupying a slightly smaller market share than they were 5 years ago. And that's because producers and consumers of commodities are taking a little bit more of the value chain of trading. And I think that, the fragmentation of the market, which started with the sanctions on Russian oil and is continuing now in other ways, particularly with this US China trade war, is going to continue to make it challenging.
And now, as you look back at the conference, were there any moments or topics that may have been surprising, or ones that were prescient, or ones that just you took away as the ones that stick with you?
Well, there were a few themes at the conference that we haven't touched on yet that I think are really going to carry forward into the next couple years. One is metals and the way that traders that might have their roots in oil and gas are moving into metals, expanding into metals. Obviously, it's a very different market than energy, but there's been a lot of investment in that space. And I think that's going to continue. And I'm really interested to see where that's going to end up when we have this conference again this time next year. And another is the questions about the energy transition. Is the pace of the energy transition proving to be kind of different than what was expected and different than what energy economists forecast? I think that, particularly given the current US focus on bringing back more coal, oil, and gas, it does really call into question some of the forecasts that were made around the energy transition. And I'm really interested to see where that trend goes this year.
And, speaking of trends this year, I also wanted to take the opportunity to ask you, you're the natural resources editor for the FT. Obviously, it's fascinating to get the perspective from outside the US, given how much is being driven by the US and President Trump's tariffs right now. I was just curious, when you step back, how is your coverage evolving now, or what are readers looking to you for in this environment?
Well, one interesting thing about our coverage is that we have to be much more short term and responsive because the story changes so much. So you have to wake up in the morning and see what's happened and then plan your day. And story ideas that might have seemed good a week ago are no longer as relevant because things are moving so fast. So we have to be kind of quicker and more reactive. In my own coverage, I've also been writing a lot more about gold because gold has had a huge rally this year, as you know, and it's also just been very much in focus as a commodity that's of interest in this time when the world is changing. Investors are changing their portfolios. Gold has really been in the spotlight this year in a way I didn't expect.
And before I let you go, Leslie, is it going to be 15 years next year for the FT? So I know you just a lot of work pulling off the conference every year and you just wrapped it up, but I'm curious, what are you looking forward to for next year for the 15th?
Oh gosh, Dave, I haven't really started the planning yet for next year, but I do think by this time next year, we'll have more of a sense of where these tariffs have ended up. And we'll know whether it was all a ploy to get better deals and then we're going to go back to the quote unquote before times or not. So it's going to be a really interesting time.